There's a massive raging bear market going on globally in all asset classes. There is no safe haven.
For long-term investors, bear markets are nothing new.
This is probably the most unusual bear market that any of us have witnessed in a very, very long time.
So what makes this one different? For starters, the Fed has just raised interest rates for the first time since before the pandemic, with total debt at 370% of GDP.
We poured $4.5 trillion in 36 months into this economy from a helicopter, into the hands of consumers and businesses all over the land. That's a lot of cash, and it's still there.
The concern was clearly an asset class bubble that was building on top of just massive liquidity.
We have lots of things kind of aligning and all aligning negatively.
A looming recession and tightening monetary policy has many Bitcoiners wondering what this will mean for the asset. The fact is, as the Bitcoin ecosystem has grown and matured, its price, as measured in US dollars, is increasingly affected by the greater macro environment.
When the market's doing well, then Bitcoin's been up, and when the market's doing poorly, Bitcoin's been down.
There's much debate around if and when we will finally see a decoupling from the broader market. But zooming out, there is clearly something else at play with Bitcoin's price action since inception.
I'm actually a Bitcoin observer, and I'm observing its trajectory as a new technology and comparing it to the trajectories of things like the printing press, or the steam engine, or the railroads, or the automobile, or electricity.
Bitcoin's growth is actually following a classic adoption curve as more and more people come to understand what Bitcoin is and why it's a better form of money.
The majority of market participants still consider Bitcoin to be just another crypto or some kind of small tech stock. Now we live in the digital age, and because of the internet, because of the digital age, we were actually able to create a more perfect form of gold, a more perfect money, and that's called Bitcoin.
What we're seeing is exponential adoption mixed in with regular market cycles, leading to spectacular volatility, mostly to the upside. For those with high conviction and low time preference, hodling through the bear market has paid off.
Bitcoin has gone up on average 170% a year for the last 11 years. It's gone down 3 different times by more than 80%.
For many Bitcoin experts, it wasn't the size of this drawdown that caught them off guard, but the timing of it.
I was around for the prior 2 bear markets. 2013, huge rise. It hit that classic bubble chart. You were mentally prepared. 2017, again, this unreasonable exponential rise. So you were mentally prepared. I wasn't mentally prepared for this one.
Are Bitcoiners feeling more pain in this bear market than they have in the past? Well, the answer may have a lot more to do with human psychology than the price of Bitcoin.
Achieving low volatility is not the objective of investing. It might be a psychological objective for people.
It is kind of hilarious. Human nature is always the same cycle to cycle. People get euphoric on massive upside and they get totally despondent on downside. And what we're seeing right now is brutal.
I think dollar cost averaging was literally made for this type of environment.
It's safe to say the investment thesis for long-term holders hasn't changed. Allocating at least some portion of one's savings to Bitcoin might not be a bad idea, especially at a lower price entry point.
Based on the metrics that I look at, Metcalfe's law, adoption-based models, demand-based models, and on-chain analytics, Bitcoin is really cheap right now.
The average investor should ask himself or herself, what do you have in your portfolio that has this kind of track record?
In the words of Satoshi, it might make sense just to get some in case it catches on.
For those of us who have gone down the rabbit hole and done the research, we view Bitcoin as the world's ultimate safe haven asset. It's literally the greatest risk-off asset that has ever been created. It serves as a store of value 100 times, 1,000 times better than the US dollar. And so we're waiting for the world to understand that